Hi everyone, it's Mark here at TSLA, and as you probably know, we have some good news today in the sense that Tesla closed in the green. $259.32 is the closing price, which was a $5.21 increase over yesterday. That is a 2.05% gain. Now, it is trading in the after hours close to 260. This is probably because Amazon's huge beat over its estimates. I want to say it was like something very considerable in the dozens of percentage in the revenue beat. So good for Amazon. Apple is down in the after hours, but the market futures index futures are slightly green. So even though Apple commands a large share of the weighting of these indexes, currently as recording this video, it's 3:35 p.m. Pacific time, 6:35 Eastern on the 3rd of August 2023. But Tesla is green, and it was I want to say it was relatively commanding green. It did have a slight retracement in the morning, but it kind of stair-stepped its way up during the course of the day, probably trying to shake people out by 10:30 a.m. Eastern time. It successfully created a double bottom that probably got a lot of people out, as you can see right here at 10:20 to 10:30, and also again at 11 a.m. And it was all up from there. Now 2%, it's good. I would say that's outperformance for the market, so you take that, because if you look at the QQQ stayed flat for the entirety of the day and gapped down from it and sold off in the morning and then stayed flat. The S&P 500 closed its gap by lunchtime-ish, sold off, probably a de-risking for the Apple earnings. As you can see, that really big red candle at the end of the day that matched the Apple candle as well for Apple's close. Though S&P 500 is slightly green in the after-hours trading, so that is not a bad thing. Probably why Tesla is going up a little bit as well, being dragged up. Like I mentioned with Apple, this is Apple's reaction to its earnings report. It posted a beat on revenue and EPS, but unfortunately revenue for their specific products of the iPhone and also the iPad haven't accelerated in the way analysts were wanting to see. They missed their estimates on those two products as well. And the guidance for their next quarter four, because they just reported their quarter three earnings, their quarter four guidance would be similar delivery, similar revenue to this past quarter. So, that's maybe not too exciting. But if we were to measure the drop from the closing price of around 191 to its current after hours trading price, it's 2.36%. I mean, for Tesla, that is 1 hour of trading probably. So you might get a better reaction in the early mornings, trading on Friday tomorrow. Maybe somewhat what happens is, even though it is a little bit red, when people get to the cash hours, 9:30 a.m. Eastern time, following an earnings report, you probably see big reversals. And it is because they don't want to sell large portions of their shares in an illiquid environment, which is after hours trading. I'm sure people that sell here are just smaller trades. You'll see if the stock wants to sell, you'll see either that represented in the pre-market trading or quick sell-offs, kind of like how AMD handled its earning. AMD had a nice pump after its earnings and sold off during the cash trading hours the next day considerably. I want to say at one point in time it was $124 a share, and then by the close of that day it probably lost $12, $13, $14, $15 a share. So they might be waiting for a more liquid market to sell or to go flat. If this goes up on this earnings report, I'd be happy about it. We all need Apple to go up one way or the other. It is represented probably in every single type of ETF that powers our retirement or our pension funds. So we can't wish ill will on the stalwart for the market, which is Apple. Amazon, which is dragging up the indexes, which is also dragging up Tesla, due to that, had a really nice performance in the post-earnings price action for themselves, 9.86%. So these are good things for us because we need the overall retail kind of sentiment to be represented in a decent way. Amazon is like the king of retail, and they posted earnings and actually revenue greater than estimated. So that's kind of good in that sense. But Apple maybe represents a bigger ticket item purchase than like, let's say, the likes of Amazon, who actually dilute their kind of like their, not dilute, but kind of boost their earnings with their web services. But the web services only gained a little bit over their estimate. So this is not just a web services cloud thing for Amazon. So would love to see how the market reacts to it tomorrow. But let us take a look at some news first before we dive into the charts again. Let's switch over to the first article in our browser, which is the first lawsuit in regards to Tesla's overstatement of their EV range. Now, this is filed over there in the Northern District of California. It's a class action lawsuit representing owners who believe that the company exaggerated the range of the range estimates of its EVs for years. And the lawsuit alleges Tesla violated state consumer fraud statutes when it falsely advertised the range of its electric vehicles. Lawyers representing the owner said that Tesla grossly overvalued the range, which is the estimated distance a vehicle could travel on a single battery charge when selling the vehicles to the customer. Now, I think, I understand that the EPA has their own estimates as far as range goes for any vehicle, be it an EV or internal combustion engine vehicle. So, this came out early this morning and the stock didn't really do much with it. So honestly, I don't give a shit about it. I just don't think it's that important. Yeah. And it's coming from the Northern District of California, whatever. Anyways, the next bit of hate news for Tesla was Tesla's China-made EV sales slumped 31% in July, month over month. Now, this is the Yahoo article that says U.S. automaker Tesla sales of its China-made vehicles slumped 31% from a month earlier, data showed from the China Passenger Car Association from Thursday, as the company prepared its Shanghai plant for the upcoming Model 3. So it goes on to say why it possibly might be a little bit lower month over month. And because we've seen the Fremont factory have renovations. We've seen last month or last quarter, even the Austin's Model Y line have upgrades or modifications to it. This is an article from Electrek from the middle of last month in July. Highlighted area says it is believed that the Model 3 production lines are likely to be temporarily shut down soon in order to upgrade to an anticipated new version of the electric sedan. Model 3 is currently only being built in Tesla's Fremont factory, we just mentioned that, and the Gigafactory in China, in Shanghai. It's not clear if that what he means by a global factory upgrade or if factory shutdowns are also anticipated in the other factories. So, we've talked about that, there's a Model 3 Highland, which is the revamped model coming out maybe soon. We've seen the test mules driving around California, and we've seen them being tested over in New Zealand. I think they're being tested in other countries like Canada as well. So what could really be happening is just simply the fact that the 31% decrease in deliveries and sales from Shanghai, some of that 31% could be because that the Model 3 lines were either inconvenienced or some of them shut down, or I know they even wanted to add some, but I think that might need a new facility. But at the end of the day, the stock didn't really react all that much negatively to this information. So, this was another early morning release that, I don't know. Like, if you just Google, if I just type in like Tesla news in Google, it just comes up with like, it handpicks like the worst news you can think of for a company ever. And this is probably because everyone hates Elon in the tech world. Like, if you're a tech CEO, I'm sure people that are running like companies that are in the tech space that are delivering news in some way, somehow, maybe they have a bone to pick. And also, when it comes to like news networks, be it like Bloomberg or CNBC, there is a kind of conflict of interest when it comes to the fact that these news agencies, be it or these news websites or newspapers or magazines, have advertisers, and Tesla, as we know, doesn't spend any money on advertising, so it doesn't have much sway over how the image of Tesla is being conveyed through these news outlets. For example, if GM and Ford's ad budget is compared to Tesla, we all know that it would beat Tesla's ad budget by $2 to $3 billion. And millions of those dollars are going to the likes of the CNBCs of the world. If you're the CNBCs of the world, how do you portray a Ford or a GM article that might sound negative? I mean, we've seen it happen with, how they reported like the Ford EV sales are up like 100% first half over first half for 2022 compared to 2023. But we all know all's well that for that, only half of that half, or 1/4 essentially of that year, was their production and sales for the Ford F-150 pickup truck EV. So anyways, yeah, I mean, kind of ridiculous, but let's talk about the option action for Tesla, as tomorrow is going to be the weekly expiration, obviously, because it's Friday. Let's see how the volume and open interest evolved. Currently, on the 275s, which have remained there for I don't know how long. They've probably been there for a while. And it was really made people really optimistic about the performance of the stock last week. It did not work out for them or me or anyone that owns Tesla. We want it to go up, right? Obviously. But you're seeing kind of this gap in the peaks with a floor around 250. And I would say kind of a ton of calls piling in the 260 to 275 area. But let's look at the volume of these options so far this week, the first 4 days. It looks like we're really building up a call wall and put wall. And these walls are at 255 on the bottom and on the top side, 260. And so we know that 260 didn't get breached today during normal hours. And this could be the reason why. There was a lot of calls to the tune of 150,000 of them at 260 and 133 at 255. Now, this, like what we saw last week, even on a 1 day left in the week for the expiration, we can see these values vary wildly, and you can watch it yourself by going to maximumpain.com or follow your options chain from whatever provider you have and watch the volume on these two particular strikes. If there's not much news overnight and we kind of go into Friday with kind of the after hours pricing where it is now, the 255 put floor and the call ceiling of 260, this kind of makes sense. Because that's where the pricing is kind of bouncing around. Now let's go switch back to the charts and just do a quick gander at how Tesla is doing again in its price action. So we talked about that Tesla is currently in this area of interest that has this kind of repeated consolidations and pricing over the last 2 months. It is on the top side of it now. So that's kind of a good thing. I think that the action, like I mentioned from the earlier part of this video, it was very bullish. Just higher highs on a local time frame, on a smaller time frame throughout the day, and maybe an equal high when it got sold off. And it was basically, this was the de-risking for some bigger earnings, some of the biggest earnings in the stock market. So I think we survived that relatively well. I think regardless of the Fitch downgrade for the U.S. debt to match the S&P Global's downgrade from many, many moons ago, I think the market is doing rather okay in light of it. Also, with Apple being down, what's Apple down right now? So Apple is down. Let's see. So Apple, of course, is the biggest weight. It being down over 2% hasn't really changed the indexes yet. So hopefully we will survive. I think what we should do as well, just we'll check out the options volume for the SPY and QQQ to see if the indexes can move Tesla either way tomorrow. Though I think from what I understand is that QQQ calls are getting kind of a lot of interest. But we'll double check that in a second. So we talked about a pattern yesterday that showed a possible distribution of Tesla's shares, meaning that the price action the pattern you're seeing is very possible that this would be the type of action that will eventually lead to a sell-off. Now, not ironically, we drew the squiggly lines and we figured by the time Amazon's and Apple's earnings come out after hours on Thursday, we would be right here at this intersection of the orange squiggly line that we drew and the white vertical line, which was the earnings line. Now we can actually move the call. We can actually do a new call wall. The call wall is going to be at 260, which we're at right now. So we'll just pretend this big blue line is the call wall for this week. That was moved down from the 270 from last week, or from earlier this week. And then you can see that's how those walls evolve. As the pricing gets sold off, the shares get sold off, the calls start piling up at different price points, something closer to whatever the price is at that very moment in time. But this is not too surprising on the downside. So if on the upside, if things were going really well for the stock, by the time Amazon's earnings, Apple's earnings came out, that would have been an equal high to the gap from earnings, but there wasn't enough momentum for that at all, actually. And we went the opposite way in our prediction, but we ended up in this place that would determine, are we going up from here? Are we going down from here? We figured that if it got to this point in pricing, that would be pretty bearish. And it kind of is, as we, on a slightly larger time frame, be it a 5-minute, 15-minute, hour, we haven't made a higher high of note. Higher high in our mind would be opening tomorrow, maybe around $262.50. And that would threaten the calls that are currently all piling up at 260, make the people who own the 255s feel pretty sad about what's going on. But then you can see those evolve quickly, like I mentioned. You can see those calls start moving, or other strike points start growing rapidly. And, we'll take, I would suggest by the time the market opens, like 30 minutes into the open tomorrow, let's say Tesla's a little bit green or flat, take a look at the options chain and see if, with a night's time for all these orders to settle in the system, if it changes, and if there's an updated wall or a floor that you can make note of, and that might make a better decision for you on what you want to do with your shares. Meaning, is it a time to close a call that's sold? Is it time to sell a call if we're really green? Is it time to, buy a call, buy a put, what have you, if you're day trading? I'll just take a look at those options tomorrow morning, sometime after the open, maybe 30 minutes, an hour after the open. But it's going to be pretty volatile. As I suspect that the reaction to Apple could be pretty devastating to the market if it does eventually sell off, because they don't like what they see. I would say, though, if you look at Apple on a larger time frame, it is trying to find this support at this low from July. And as you've seen, like, as far as, and it's not all that dissimilar from Tesla's kind of pattern. In June, we've been ranging since the beginning of June. And if you look at, this peak here, this is the middle of June for Apple. It's kind of back at its same price at where as it was. It wasn't like Apple was on some crazy run up into earnings. I would say it was actually just very much consolidating and ranging, just like Tesla did. So it gives an opportunity for for Apple to kind of settle itself and not sell off too hard, hopefully. But just like Tesla, Apple has these kind of peaky pricing where it's like it runs up, sells off big, runs up again, sells off big. And it did break out of a downtrend. So it is currently still in an uptrend. And if you're an Apple, you might find some buying at around $182 a share. But of course, as Tesla holders, shareholders, we don't want that. We really want Apple to base here or get some interest in the morning with hopefully what people consider a discount price. So the idea of distribution for Tesla is still in effect. We're still really kind of in the middle of nowhere. If we would have closed that gap, that would have been really nice. I think that would have been really bullish, even though that would not be making a new high. But what you want to see is maybe make a new high in the morning, maybe make a new high overnight. I would say, let's just measure from their close. To make a notable high, I think going to 264 would be pretty notable. It will keep from paying out the 265s, and that's good. That might be a compromise the market's willing to accept if you see a lot of calls being piled up at 265. If we can get an open over 260, which is currently over 260 right now in the after hours trading, if you get it open at 260 and you see the price move up pretty rapidly to 264, 265, kind of use that moment, watch the pricing pretty closely. And if it starts kind of basing there, if it starts trying to find a consolidation point at that 264, 265, that could be your opportunity to either sell a call against any shares. We talked about how to hedge upside risk. We're still technically in a uptrend for the year. I know we're in a bigger downtrend. So we're in a downtrend for the bigger time frame. So, hedging is really dependent on the time frames that you pick. But it's something to consider. The points that, that are going to be major resistance points is that 265, the 267.50 strike, which is going to be kind of equal to these highs that we ranged at last week. So if you're looking to hedge again, or let's say you're already hedged though. If you're already hedged, let's say you sold a call because you wanted to get some premium, and depending on when you sold the call, a flat open could be an opportunity to get out of a call. As far as if the pricing sells off, you can always just resell it. Like we're talking a couple percentage different. Think about selling calls like buying options. Like when you're selling a call, you can put a stop loss on that too. So you can sell a call. Let's say we get to the 262.50 or the 265, you can sell a call, and if you want to get out of it because you think that there could be some more momentum to the upside, you can always put a stop loss on a covered call, just like you're day trading essentially. Like you don't have to feel like once you sold the call you're stuck in it. You really have to see it like if you were to think about the opposite. If you were to get pricing, if Tesla gets to like 262.50 and 265, and you're bearish, right? You want to short Tesla with a put. You buy a put, and you probably put a stop loss on that put. Okay, so let's say you buy a put for next Friday, not this Friday, not tomorrow, but let's say the 11th of August, and you buy a strike at 240, and you pay, I don't know how much that would cost. Let's say it's $1, right? And that's your trade, that's your swing trade. But you don't want to get it. You don't want to get out of that trade out of control right off the bat once you buy it. So you put a stop loss on it. Let's say you put a stop loss, you're willing to risk 20%. So it's at $80 or $81 or something like that. And so if it hits $81 and you get out of it, you might feel better. You're like, okay, I'm out of that trade. Maybe I can get a better entry later on today, or it's probably just maybe better to wait until Monday. That's the same thing with a covered call, except you don't worry about the theta loss all that much. You actually want the theta loss to happen. But you can consider when you sell a cover call, buying it back at X number of percentage. Maybe you want to put a stop loss to the upside of 5-10% for the day. So because you want to make sure that you get a good entry for the day, because you don't know if it runs 10% in one day, right? But having those kind of strike points to really kind of configure your mind for this is when I sell, this is when I sell, or this is when I close. That's going to be helpful because you kind of just go into it automatically and you don't want to think about it too much, because we've seen when it hits those certain prices, the reversals, if there's kind of a bearish momentum, the reversals are really, really quick. And if you're not really on point, you kind of miss the good entry. And we have really good examples of that, especially on the gap ups from last week. Like, so this is a gap up in the morning. It gets to 269. It doesn't even touch 270 and it sells off immediately. If you just said to yourself, $1 before a strike price, that's where I'm selling, you could have captured on a cover call a dip, like a 2.15% drop within 45 minutes. And it happened again right at the same 269.08. Okay. It's not making the next strike at 270 because what? There's probably a lot of calls there that they don't want to pay. And this is a gap up again. It gaps up, and within 20 minutes, it sells off over 2%. So when you get those spikes in pricing, sometimes we're currently in a downtrend from earnings for the last 2 weeks. If you think 2 weeks is a decent enough time frame, we are in a downtrend. So if you ask yourself, if this price opens at 262.50 tomorrow, like what do you do? Like this puts you, 262.50 would put you at this range right here. You'll be right above it. That move though, it might be hard to capture because what I said is it can reverse so quickly on the open, and it's only a 0.68% move. But if there is buying to be found tomorrow morning, I'm looking at the 262.50 strike, and then I'm looking up at if it goes up 1.5%, that would probably be at the 265 strike. Now, I do want to make mention that we also talked about a reaccumulation pattern for Tesla's price action. And a reaccumulation means that, okay, it has a sell-off, it has like a healthy pullback, and it's just looking to kind of take a breather before resuming in its upwards trend. Because if you look at a bigger time frame, we are in an uptrend still. We haven't made a significant low that beats this low from the end of June, which is $240. So technically, if you're below 240, then you can kind of say to yourself, hey, I think this uptrend on the bigger time frame is just not valid anymore, because you're making a very significant low, threatening to clean up these gaps at the 235 and what's this 220. So if you find yourself at that point, you can say to yourself almost, and this is not financial advice, this is what I'd say to myself, like going short here for a swing trade of a month could be beneficial, to not to mention that it would be a hedge against my own holdings. And the trend and action just kind of says it. The pricing says it, that there is very little interest. But we can take in the short term solace in the fact that we had good price action today. We can be at some pivotal points by tomorrow morning at the open. Like I mentioned, we could be looking at an open at a strike point of 262 or even 260. Like we mentioned, 260 is actually above the current quote unquote call ceiling that we kind of moved the line to. And so if this was going to turn into a positive story instead of the very sad stories we've been telling over the past couple of days, if Tesla becomes a positive story somehow in some way, which of course we all want that. I mean, I've been pretty down about it because I really don't like the ranging that Tesla's been going through over the past year and a half. But how do you turn this price action into an accumulation pattern instead of this distribution pattern? Well, we just kind of can reconfigure our minds to say, this is now a spring, and we use a different schematic where we now have a spring that pricing would violently bounce from. So one of the Wyckoff patterns for accumulation and distribution has these moments where it peaks below a range or it peaks above a range, and then reverses quickly and violently to the point where it would threaten to make a new high. You might see a little bit of pullback, but you kind of need to see a kind of violent action to feel confident about that type of accumulation. But this sets it up for the fact that, okay, you get that quick sell-off, you find buying, you get a test again here outside of the range still, because this was currently the bottom of our consolidation range, which was 254 on the strike on the share price. And you kind of had some tests going down, so that's healthy. But you found buyers every time, and you found buyers at higher strike points at every time, even though Apple was selling off during Thursday's action. What does it look like to make this? So we have the drawing for the downside. All right, let's do a quick drawing for the upside into the close on Friday. What do you think this is going to look like? So we're here. I want it to, if this is going to be bullish, I really want it to be pretty violent. I want it to be, it doesn't think about 262.50. It gets to 265 immediately, which I think we said it was like a 0.68% move. And this is where it settles. And it does this, it kind of maybe sells off. And it's basically a consolidation until the end of the day. And it does something like this. Below the range of these peaks, and that's what I would like to see. And what would that move be in percentage wise, so we can just kind of keep a mental note on what that might look like. So from the closing price, that would be a move of 2.76%. Now the downside I think stays intact, where if there's going to be a sell, it would be kind of based off how Apple is being received in the morning. So in the morning, if it sells off really quickly, and it might start from a gap up. It could be a gap up where it's like here, and then it sells off like that. And then it kind of settles during the course of the day and sells off the end. These are not lines where I think it would end up being, because I think that would be rather severe to drop that much in percentage wise, but maybe you get a move that's like 1.76% down, something like that. But of course, we don't want that. We don't want any of these big crazy lines going down. We want a gap up, and then we want what's called a non-participation rally. So I don't know if you guys heard me talk about a non-participation rally. It's a type of Wall Street rally that I find when they are very convinced of something. It is a gap up and straight trading, and then the move. I think we've seen that. Have we seen that this week? Oh, SPY is going up a little bit more after hours. Is that maybe Apple's getting a little bit more buyers? Maybe. Let's see where we found that. It was like, oh yeah, okay. So you have like, there is this kind of like consolidation here. And at the end of the day, it just gets bought back up like monster huge. And that made a lot of people a lot of money. And the people that made a lot of money are probably just market makers, right? And overall, if you're looking at the pricing over this is the S&P 500, it's hard to make money this way unless you're already positioned. If you're trading flat like this, for days. It's very difficult to make money sometimes, because even though you get these big moves, sometimes when the volatility collapses, the options don't really appreciate that much in value. Of course, this move was really, really good, but then you see, like, look at this. So the S&P 500 has been pretty lackadaisical for quite a while. This time frame is the 15-minute time frame. So the consolidations, these ranging patterns, this is a lot of cooling off, in my opinion. This is cooling off to give yourself the opportunity to make a big move. Is a big move to the downside. If the big move to the downside, 443 is 1% away. That could be pretty devastating, but overall still pretty bullish in a bigger time frame. That would actually clean up the imbalance. There isn't many gaps really to worry about until 420. So in the short term, maybe you go there. We don't want that. Let's clean up this gap. Let's go up and just say this was a healthy pullback. We got a nice spring here with some buying today. I want to move up from that, bring Tesla up with it too, and I think things will look a lot better. Now we talked a little about how the yields were going up. I think we drew a chart on the US 20. Here's the US 20-year bond. Okay, so this blue line was where we saw when the downgrade happened, we drew a blue line here saying, look, this means that it's really pushing 3 times, pretty hard, maybe 4 times, against, what is this, 4.3%? 4.3%. And it found itself relatively quickly selling off slightly from 4.5%, right? So we kind of understood that the yields are going up. Can yields go up when stocks are going up? I think they can. Because people are trying, you might have groups of people, maybe not the average, small-time retail investor, but let's say you were you would say, okay, but people are buying bonds, right? I mean, so why don't they just buy bonds instead of buying stocks? Well, number one, like, that's tying up your money for long periods of time. But when people say people are in bonds, maybe they're in bonds they're in like the TLT type of things, where they're actually wanting the value of the bonds, which would be the inverse relation to the yield. So TLT is an ETF of the 20-year and 30-year bonds. It is dropping precipitously in price in comparison to the yields going up, right? No one wants a 4.3% bond when they can get a 4.5% bond, right? That just makes sense. So those bonds will be lower in value. So when the yields go up, TLT goes down. But the thing about it is TLT and TLT-like ETFs that represent these bonds of different maturities have been getting massive inflows since the beginning of this year. So if you're getting massive inflows into the beginning of this year, the implication was at the beginning of this year, people thought the economy would be in dire circumstances that would make their bonds appreciate in value, because when the economy gets worse, okay, the yields would come down for the fact that when the economy gets worse, stocks will get worse, and people would rather be in a bond than in an equity. It's like a stock. But when the economy is doing kind of okay and the stocks are doing great, then why would you want to be in a bond, right? So that could be how the yields go up and stocks go up, because I don't want to buy bonds, I want to buy stocks. And when yields, but the thing about it, there's another relationship of when the yields go up, it's kind of risk-free, right? You can buy bonds, and that is a risk-free investment. That's what people think, right? And that comes with another situation, which kind of makes this a tangled mess, that, well, the yields are going up, not because we're going into a recession, but because some agencies are losing faith in the debt, long-term debt of the United States of America. So it is these bonds that are at risk in the eyes of a Fitch rating agency or an S&P Global or a Moody's. Like these agencies, they're downgrading our debt. So when you downgrade the USA, you can downgrade the USA in different ways, but it's in regards to long-term debt. And long-term debt is, if the yields are going up because maybe it's not that desirable. Okay, because ask yourself this question: are you wanting to own Apple, which has seen a dramatic rise in price since January, or would you rather have been in a bond? You would have made what? It's been 6-7 months. You would have made 2% on a long bond, maybe 2.5% on really short-term notes or bills. That's not that great, because you can get a 2.5% move from Apple in a day, right? And there probably have been days this year that you probably get those moves. So that's the thing about the yields, is that, yeah, they're going up, but the stocks are going up in spite of that, which is kind of not that. It happens sometimes. So that's pretty rare. What happened in 2011 is, so our debt was downgraded by S&P Global, but since there was a European debt crisis from like the insolvency of Greece, and there's another country that having big problems too. Was it Spain or Italy? That people are rushing over buying every time the yield popped on our bonds, even because they're being downgraded. The Europeans are just like buying them like they couldn't have enough. So there's these really weird situations, because remember last year in 2022, when yields would go up, DXY goes up, stocks just precipitously fall. So think about how our equity, how Tesla, how other stocks are doing fairly well in spite of these higher yields, and that's something to take note of, something to be positive about. Oil is getting to some very recent near highs. I would say if you see oil come over $83 a barrel, could be problematic for inflation a couple months down the line. Just something to keep note of. But ironically is when oil goes higher, right? Doesn't it just mean more motivation for someone to buy an electronic vehicle or like electric vehicle? Let's just do a fun plotting of Tesla over WTI crude. Let's go to a daily time frame. So when oil goes up, Tesla goes down. When oil goes up, Tesla went up. When oil goes down, Tesla based. It's anything from this point on, it doesn't really matter to me, because that's when Tesla sold. I'm sorry, when Elon was selling. But yeah, see, so here, when oil gets expensive, Tesla gets expensive. When oil gets expensive here, Tesla gets expensive. Something to think about. Something kind of interesting to think about. Like when I think about just living your daily life. Let's say you have student loans. Let's say you went to college, you have some debt, and you've been not paying because there's been this reprieve by the Biden administration on people that have student loan debt. And stocks like SoFi go down a lot because they're not collecting any interest payments or payments at all on these debts, and not making money where they need to be making money. So it's like if you're eventually going to have to pay these debts, maybe getting into stocks that would benefit you while you do that. Meaning like buying stocks, like if you have an internal combustion engine vehicle and gas is getting more expensive, but you didn't buy any ExxonMobil last year. Kind of doesn't make sense, right? It's like almost your hedge. And maybe Tesla would be strong in the face of a stronger oil market. With demand in China opening back up, commodities like copper and oil would be telltale signs of economic recovery over there. It might be good for Tesla to have more demand in China. Be good for Apple as well, as they have a big market in China as well. So I know I've been blabbering a long time. Thanks so much for listening, guys. And let's hope for a small gap up tomorrow and steady buying throughout the day. That's all we can hope for. But if it does open flat, I would be wary. Get ready for any quick downside moves. I'm not saying to be there all day, but if it opens flat, that's not very bullish. Okay, guys, have a good night. Bye.